many investors, including myself, were eager to hear from UiPath CEO Daniel Dines in his first quarter back at the helm as CEO of UiPath. The abrupt reinstatement of Dines as CEO spooked some investors. Thankfully, the founder of the company hit the ground running and made several improvements to business processes, including a cost-cutting effort. So let's get a closer look at the latest developments and understand what's going on at the automation and artificial intelligence company. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now. CEO and founder Daniel Dines said that we are pleased with our second quarter results, which exceeded the high end of our guidance across all key financial metrics. And that's true if you look at the company's revenue, operating income, cash flow from operations. They all exceeded expectations and they exceeded forecasts from UiPath management. CEO saying, I am excited and energized about my first quarter back in the CEO role. Daniel Dines was the CEO before, and then he handed the reins over to the CEO that was just ousted, and he came back as CEO. So it looks like maybe he felt he prematurely gave up the CEO role in the first place and wanted to come back and take over as the leader of the company. And now that he's back, he feels good about being back in the CEO role. I was a little bit curious how this would proceed. Would he be back temporarily and tell investors that he's only back as a custodian temporarily and he's looking for another CEO to replace him again so that he can step back and take a bigger picture view of the business? Or if he would say that he's in this, he's going to be the CEO, he's not searching for someone else, and he will continue. And that looks like what will be the case, which I favor. There's already been so much change at the top at UiPath. I would prefer Dines stay and stick around for a little while before, if ever, looking for another CEO to take over again. So one of the first things he did was have communications with some of their largest customers, and he quotes one of the largest customers here who said, we went through a series of workshops internally to develop our AI strategy, and the outcome was more automation. And of course, UiPath sits at the crossroads of automation and artificial intelligence, two of the most powerful tailwinds in enterprise right now. Businesses are looking to automate as many processes as possible because that reduces errors and it lowers costs. It also increases the customer proposition, the customer value proposition, because you're faster, you make fewer mistakes, and it's a win-win situations. Customer really like those kinds of situations. The CEO saying that I am committed to continuing to sharpen our focus on operational rigor while leaning into areas where the return on investment is the strongest. Our go-forward priority will be balancing these investments while expanding operating profit margin and delivering sustainable adjusted free cash flow. I like to hear this when a management team is focused on profitable growth, responsible growth, prudent growth, and is not just talking about we're going to invest and we're going to grow and we're not going to look at costs. We're just going to try to innovate our way out of our situation. And I tend to not favor those types of situations because there can be a lot of waste when you're just focused on growth without looking at the other side of the equation. So I like that UiPath is taking a more prudent approach, and it's one of the reasons why I've had UiPath rated as a top 25 stock. I recently upgraded this recommendation around May 1st or June 1st. You can look at my videos to see precisely when I made that upgrade, but I updated it again on September 6th, reiterating that I still think the stock is a top 25 buy. I like the valuation versus the risks. I like the long-term prospects. And I think at current prices, which right now the stock is trading at a forward price to earnings of 27, I like these prospects for UiPath. And I reiterated that in my video, which updated that recommendation. I mentioned a cost-cutting effort, and that was to reduce their workforce. And streamlining their operations and organization. It's very common when a new CEO steps in to have some cost cutting to reorganize the workforce, because some of the employees that are there when you come back are not your team members. They might not be the people you want in those roles. So you reduce your workforce, you let go of some of those people, and that opens up opportunity, that opens up space so that the incoming CEO has certain people in mind or certain talent groups in mind that he might want to bring in. So this creates an opening for that, to bring in a team to your liking, to fit what you're thinking about for the next year or 2 or 3. You, as the incoming CEO, know or have an idea of the type of talent you want, and so you make that room available. So with these strategic actions, the company now expects non-GAAP operating income of $170 million for their current fiscal year, which is 2025. Now, this was an increase of $25 million from the outlook just 3 months ago, so a $25 million increase. But that outlook a few months ago was a big decrease from before. So they had downgraded the outlook big time, over 100 million decrease in the operating income expectations. And now after 1 quarter, they say, maybe we downgraded it too much. Let's bring it back up a little bit, 25 million upgrade here. And I wouldn't be surprised if after the next quarter, they upgrade it again for 2025, because I felt their initial downgrade of their operating income expectations was extreme. And so I wouldn't be surprised if they lift it back up as the year progresses. And as the CEO says, we're focused on driving a deeper strategy around our growth products. One of those products is Autopilot, and they've seen great early adoption and positive feedback from customers. The next phase of Autopilot, which is Autopilot for everyone, they expect to have in general availability this fall. Now, I looked at the demo for this product that's coming out in the fall, and the demo highlights an example of a medical patient that wants to donate blood, and how UiPath's software, its automation platform, can help enhance the process. It's a tedious, repetitive process, and by implementing Autopilot services, you can onboard these patients and accept these patients and have blood donations happen much quicker than before, and with fewer errors, because if a automation platform is reading documents, right? They showed an example where you can plug in the patient's driver's license and the platform will extract the data directly from the driver's license. And that's less error prone than if an individual is looking at the driver's license and typing in the information, not to mention much quicker and more cost effective for everyone involved. So it's interesting to see, and it remains to be seen how popular this platform will be. But given its capability, I wouldn't be surprised if it comes out to huge success. So overall, it's good to see that the incoming CEO, for one, is not looking for another CEO to replace him. It looks like he's here to stay for a while. That's good news. It's also good news that they upgraded their operating income outlook for the rest of 2025. And it's good to hear the company's new products are coming out with success. Before I let you go, let me tell you about the greatest deal on YouTube. With just a click of a button, you can get free financial analysis from a professor with decades of investing experience. So what are you waiting for? Hit that subscribe button, and I'll see you again soon.